Today I'm going to be starting a brand new crypto portfolio, a portfolio that anybody can follow along with ease. We're going to be starting it from scratch, and the aim of the game is to position ourselves for that next bull run, but more importantly, we want to use the least amount of capital at stake possible. So it's going to be $50 here, it's going to be $50 there, and we're going to see where this thing gets us in the bull run. So stay tuned. We've got 5 different cryptos to go over today. There's 5 different entries that I'm interested in. Which one is going to be the best entry to add to our portfolio and why? With every new portfolio, we need a portfolio tracker. Why is that important? Because we need to identify, we need to understand the performance of our portfolio at any given time. We need to know what's overperforming, underperforming, what needs to be diversified, and how well we're doing at any period in time. So the one that I'm going to be using today is CoinGecko. The reason why we're using this is because it's completely free to use, and I want you to get used to using it as well. You need to identify whether something's performing good, whether something's performing bad, whether something's gone to zero, whether something's gone to the moon. This can tell you. So first and foremost, top left hand side, once you've signed into CoinGecko, completely free to use, you can click on the My Portfolio. You've got a My Portfolio button here, click on that, and then you've got My Coins. What that's going to do is it's going to bring up this. So this is our portfolio, the Crypto Bullseye portfolio. We've got one coin in there. That was the coin from yesterday. That was Scallop. I managed to put $50 of Scallop in there. Like I said, I'm not shooting for the moon. We're doing a limited amount of capital, and we're going to see where this thing gets us. So $50 I put in there, it's worth $51.75 now. Got one coin in the portfolio. We're going to add another one today. We're going to jump into the charts very shortly, but I just want you to see what the portfolio tracker looks like. Each time that we add something to this, it's going to combine the profitability, the P&L, and it's going to show you real time how well your portfolio is performing at any given time, and that's what we're looking for. So let's jump in the charts now. There's 5 different cryptos that we're going to be looking at, and I'm going to identify one to be added to the portfolio today, and I'm going to show you the upside potential, the downside potential before we choose which one we're going to add. This was the first one I showed you on CoinGecko that we've added to the portfolio, $50. It is Scallop. The reason why is because of this long break and the retest. We're holding support. I've measured the downside potential compared to the upside potential. I'm happy with my risk management. I'm putting a small amount of capital in. This is a high risk cryptocurrency. That's why I'm only putting $50 in. And I've got stop losses below the low here, sitting at $16, 16 cents. Why have I got stop losses below there? Because we've calculated this in. Although that we're holding this strong support that's held for such a long period of time, we've dipped down. The bears have managed to dip down a couple of times. It's been met by buy-up orders and buy-up orders where we've regained the level quite quickly. But what happens if we go down to there? How could you play this to your advantage? If you had stop loss below this previous low and this happened, we've broken, although the break and the reconfirmation retest hasn't held, we've slammed back down, the bears have regained momentum. What do we want to do? We want to be stopped out with the least amount of capital, and we want to be buying back at this lower level where we didn't previously have an opportunity, but now we've got another chance to fight another day. We've got capital because the stop loss has given us capital, and then we've managed to get it at half the price. So risk management's a powerful thing. That's Scallop. So we've done Scallop, we've added Scallop on there. Scallop's still a good buy for me as far as I'm concerned. 20 cents is a good buy for Scallop. Right, okay, we've got PayPay. This was a request. I just want to show you this so we can analyze this in comparison with the other ones to find out whether you think, firstly, is this a better entry? And secondly, what could happen if something went wrong on this? We're in an ascending wedge. The ascending wedge is a bearish move. And you expect, once this level has dropped, to have a volatile move to the downside. It doesn't mean we're going to have that, but there's a high probability that that will happen once this level's dropped. So, measure the upside to the downside. Now this is where things get interesting, because the upside potential for Pepe is a new coin, the Chinese Pepe. It's a new coin that's launched. It's a popular one. What's the upside potential? We don't know. It's in price discovery. Upside could be here, it could be here, it could be anywhere. What's the downside potential to this previous low? 86% to the downside. If you put $100 in there, you've got $14 left. If it goes back and tests this previous low, you've got $1,000 in there, you've got $140 left. What will that do to your portfolio? Think about that, guys. Can you afford to risk your portfolio with that? That's why I'm going to be focusing on those killer entries at low levels where the upside potential is greater than the downside potential. Next one we're going to look at is Matic. Now this is an interesting one. The reason why I picked this is because it's waiting to break, it's waiting to break. Again, the downside potential compared to the upside potential. This range is held for such a long period of time. It's held for a long period of time, you expect it to hold as support. More importantly, once we've broken this, what does this allow for? This allows for us to confirm that the lower low is in, and then we're expected to put a higher low in, and we can start trailing and trailing and trailing and protecting our position. Not interested yet, guys. I want the break on this. Doesn't necessarily mean I always have to have the break. If they've got minimal downside potential compared to upside, I'm quite happy to put a small amount in there. But on this one, I want the break because I want that protection level. I want to protect myself below this previous low. And I can't protect myself below this previous low until we've broken and put in that higher low. It's important, guys, otherwise you could get something like this, a double bottom. This is still in play. Come back down, you've rejected off this area, the same as you've rejected off this area and the areas above. Then come back down, double bottom before you break. Double bottom is going to be more of a confirmation here, so there's a probability or there's a high likeliness that we will come back and test the double bottom. There's more chance that we're going to come back and test this as a double bottom than break through here. Why is there more chance? Because it was rejected here, it was rejected here, it was rejected here. This trend has been rejecting them until the bulls regain momentum, and then we start putting in those higher highs and higher lows. So I'm waiting on Matic. That's something possibly for next week. Beam, I am interested in this. This potentially could be the one. Right, okay, so Beam, why am I interested in this? First and foremost, we've got bullish divergence here. We put in a lower low, lower high, lower low. What's happened on the RSI? Just pull that up. You put in a lower low, you put in a higher high, and then you come back down and you put in a higher low. So that's indicating that the buyers and the sellers, or the buyers are outweighing the sellers at this point in time, and the chart needs to catch up. Had a break of trend, that's another positive. Next thing we need to do is measure the upside potential compared to the downside potential, find out how much capital that we can risk. So what we're going to do is stick in the trend line, stick it in at horizontal. You can see it's had 1 touch, 2 touches, 3 touches, 4 touches. It held for a long period of time here. Then it's come back down, we've touched again before we got the break. That's showing where the bulls really regain momentum at this trend line. That give them the momentum to break through the trend and regain levels. So I'm interested in Beam. Next one, Arbitrum. So I'm interested in Arbitrum, guys, but the problem is this horizontal here. See, we've broke it, we've held it as support, we've come back down, we've held it as support, and we've held it as support. We fell through, and what's happening now? What was previous support is now acting as resistance. So before I'm interested in this, I want to get back and I want to regain this level. I want a candle close above 78 cents on Arbitrum before I'm interested again. I want us to regain this level, put in a higher low, put in a higher high, should I say, and then start making moves to the upside. So we can monitor that, we'll keep it on the list. We can look at that next Wednesday. If it's not available next Wednesday, we can look at it next weekend. Right, left zero. Again, guys, I'm really interested in this one. How are we going to know when this is going to be good to go? We've got no support here. We've got no support here where there's a lack of build-up of price action. The lack of build-up of price action, we've got no support to go by, we've got no resistance to go by. Look what happens when you get support. You get support, you get support, you get support. That holds. That's horizontal support, guys. This is strong support. When you've got a lack of a build-up of price action, like we've got here, nothing here, that creates a gap, that creates indecision. So once we've broken, it's likely that we're going to go test this pretty quickly. However, how do we know that we're not going to drop this level? So we've got no support to go by. Go back and ultimately test the launch price. We don't know that that's not going to happen. So the one for the day, guys, one for the day is going to be Beam. I'm interested in Matic. I'm really interested in Matic. I'm interested in Arbitrum. I'm interested in left zero, but I'm waiting for additional confirmations before I can add them to the portfolio. So $50 a Beam is going in there. I'm going to add it to the portfolio, and you'll see that in the next video. So let me know in the comments, guys, what's been brought to your attention. What would you like me to cover? Because I'll show you. We can find those killer entries. 9 times out of 10 it's not going to be ready to enter, but we can monitor it and follow it and be able to get in when the best opportunity is possible. If you did like this video, guys, subscribe to the channel. It's going to help me out. Let me know what you want me to cover. Hit the like, hit the like as well, and I'll see you in the next one.